So next up is a private company, Gazelle Energy. They are focused on gas opportunities within Turkey. Obviously, we all know that European gas prices have been quite volatile to the upside, which is always good for the producers. Maybe not so good for the consumers. But obviously, the continent is looking for additional sources of gas outside of Russia being a major supplier. And Turkey has started to show a lot of potential to satisfy some of those needs. So with us today is Michael Volko from Gazelle, Chief Executive Officer. I will pass it on to him to take us through the story, and we'll wrap it up with a Q&A after 20 minutes of presentation.
Very good. Thank you, Adam. I'd like to start the presentation with the number 11. And you might ask, well, what is the significance of number 11, notwithstanding it's Mark Messier's jersey number. But that is the difference between NYMEX, the front month contract for North American or American gas at $2.50 today, and the current monthly gas price in Turkey is $13.50 US per MCF. So it was interesting to listen to the previous two companies who are exploring in the hottest basins in the world, the hottest basin, the Orange Basin. We certainly have an asset in Turkey, which is the hottest gas market in the world today. And certainly we've seen the volatility in European gas prices over the last 18 months since the Ukraine conflict started. As Adam said, the volatility is there, but certainly there is more upside to gas price than we think that is downside. So Gazelle is a private company focused on international E&P. The co-founders of the company all have prior extensive international experience. And of course, anyone who, or the companies that are presenting here today recognize the difference between doing a domestic asset project or doing an international project. The scale is much greater, the timelines are longer, but the potential of international projects certainly is there. And we have acquired our cornerstone asset, which is a petroleum license containing the Pelevankoy gas discovery in the Thrace Basin of Western Turkey. We've been at it now for a couple of years, taking our time and making sure that we have a good understanding of the geology, leading to a financing that we undertook last October, where we raised funding to drill and case our Pelevankoy 2 appraisal well, appraising the original discovery. Total depth is around 3,080. I'm very pleased to announce that we have commenced drilling, and we are currently at 1,400 meters and expect to reach the main pay intervals here in the next week or so. So a very exciting time for our little Gazelle here. And we're very, very pleased to be exposed to certainly the asset base that we've acquired, as well as the upside in gas prices. So clearly we are a small company. We are more or less self-funded. We are looking for basins with proven petroleum systems. We're looking for existing appraisal or discoveries that may be non-core or a marginal field for redevelopment. We are opportunistic. We came across this asset in 2018 and managed to acquire it for very, very little with respect to our work program. And we have very good exposure to the upside. Also, in the last two international startups that I founded, I look for places where we can take our North American and our Canadian technology on drilling completions and reapply it to parts of the world that just haven't seen that sort of innovation over the past life of the mature basins that we have. So we are very opportunistic. We have a great asset here with excellent economics, and certainly we will have some completion results in the fall, end of August, and perhaps on into September. The location of the Pelevankoy gas field is in Western Turkey. It's about 180 kilometers from Istanbul, about 50 kilometers or so from the Greek border. It's an excellent area to operate. It is rolling farmland, small villages, a few small towns, but certainly easy access. And we've had nothing but great compliments from the locals there in terms of our interaction with them and their support for the industry there. They recognize that developing the local resource base is good for the country, and the government as well has been very, very supportive. So we have an excellent operating environment there. The Pelevankoy discovery was actually drilled in 1992 by Turkish Petroleum, the state company. We have collected all of the G&G data, including a 3D seismic program that was acquired in 2005 that fortunately turned out to be very, very good quality and saved us $2 million from the work program that we bid, which included some 3D seismic on the license. So we purchased the digits for the nominal sum of $26,000, had it reprocessed in Calgary at Key Seismic, and certainly it is excellent quality. The gas pay lights up with seismic amplitudes. We have a number of other prospects that we've identified that have yet to be drilled. We think there could be in excess of a TCF of gas based upon some volumetric estimates of the other prospects. We are currently drilling our high impact twin of the existing discovery well, Pelevanco 2. We had a recent D&M report done. We have 27 BCF of 1P, 65 BCF of 2P, and 3P is 376 BCF. So certainly a significant upside potential for a very, very low cost of entry. Just briefly about our leadership team, Ken McNeil is a well-known Calgary-based landman. I think he started 10 or 11 companies in Canada. He's been with me on my prior 2 startups internationally, the first in Kazakhstan, the second in Oman. I'm the CEO. I've spent the last 30 some odd years of my career internationally. I love it. I love the travel. I love meeting the new cultures. I've made many, many good friends that the sad thing is they live in other parts of the world because they would be friends in Calgary if they happen to live there. And then lastly, we have David Kiselewski as our EVP Exploration and COO, another seasoned international explorationist who's had exposure in many different countries in the world. So we're not naive about the international game, but we are in fact thrilled by the opportunities that present themselves, as some of the other companies here in this conference can also attest to. Just a little bit about prior successes. I don't want to bore you with the details, but we've been involved in 5 international startup successes. This would indeed be number 6. We are hopeful that we can continue our track record. It's not easy. We have challenges with respect to raising capital, being a private company, but certainly in my last success, which was in Oman, we managed to sell for $30 million to EOG Resources out of Houston. A very nice turn on the dime for our shareholders. We look at this asset as a similar track record in which we've been able to acquire good assets organically for very little upfront cash. We haven't done any acquisitions. This is all organic identification of these opportunities, pursuing them, and ultimately bringing them into the company or a company. So we hope that this will be another success under our belt. A bit of a timeline. We were incorporated in March of 2018. We were awarded the block in January of 19 after a competitive tender. We were delighted to have been awarded the license. Indeed, one of the competitors in the tender was Turkish Petroleum, the state company. And as we were told at the time that generally Turkish Petroleum, whatever they want, they get. But we hit the Ministry of Energy at the right time where they were changing their philosophy that TPAO probably has enough on their plate in terms of acreage. And certainly given the most recent multi-TCF discovery they made offshore in the Black Sea, that is probably the case. So we awarded the block. We worked it up from acquiring the existing geological data. Then we took a 2-year COVID hiatus, not being able to raise any funding or being able to travel to Turkey here. But we resurrected our efforts in the summer of 22, leading to the closing of our private placement in October. That got us going here. We contracted a rig in April. And as I mentioned, we are currently drilling on site here today. So it's been a bit of a long road, but as I said, these international gigs take a little bit longer, and we do appreciate the patience of our shareholders, but definitely the potential that we have for the limited amount that we acquired the acreage, I think is a very good risk-return relationship. We also have a number of new ventures in the pipeline, again, looking for good assets that we could acquire cheaply. And then we do intend to continue with the appraisal and development and production of this block. It is well within our skill set, being onshore opportunity, moderate depths at around 2,000 meters. So certainly we would be delighted to bring this into production here over the next 12 to 18 months based on the success of this initial well. Strategic basin, and it's in the Thrace Basin. It tends to be gas prone. It's a very, very good area from access point of view, rolling farmland. There is good gas infrastructure here. There are a number of players, including TPAO, that are producing from the basin. So in terms of accessing markets, it's very, very well situated. Here's the strat column for the basin. Fortunately, we have multiple pay zones. You'll see the stars there denoting various intervals that currently have production in the basin. We are looking at the red ovals, one being the Meserdaire Teslamcoy member, and then lastly the Echelon. And I'll talk about the Teslamcoy here in the next slide. But the Echelon is a deeper basement target. It's actually a fractured volcanic or tuff play right on metamorphic basement that has been discovered recently. And we know that 2 other operators have made recent discoveries very, very close to our block in this J-land formation. So we will be drilling down to test that at around 3,100 meters here once we case off the main Teslamcoy pay interval. And we're excited about the prospects of that J-land deeper potential. Just a little bit about the basin. Probably everyone's familiar with the Valeura story. Valeura having a deep basin-centered gas play, which they have been pursuing for a number of years. They drilled 3 wells into the play, got some modest gas rates at around 4,000, 4,500 meters. We are in the sweet spot in the basin in which we are shallower, say around 2,000 meters, so much less expensive drilling. And there are also some shallower plays at around, let's say, 1,000 meters. So we have the depth to have higher potential for higher reserve volumes, as well as deliverability without the extreme well costs that would be experienced by drilling for a deep basin-centered gas play. We are pursuing the Teslamcoy, which we think is a turbidite fan. And I'll show you a seismic amplitude map, and clearly it has that elephant footprint that very much matches what we think the depositional environment is. Here's what got us excited about the acreage that we acquired. This was, again, the Pelevancoy 1 discovery well. On the right-hand track, we see 41 meters of gas pay that tested at low rates. We think this is a tight gas play, not unconventional, although we do speculate that below this Teslamcoy pay, for about 700 meters down to basement, we have gas shows, and we do think that that is likely an unconventional play that could be pursued, say, in the 3rd phase of our efforts there. So there's no shortage of gas shows on our acreage, and we do have very clear gas pay within the Teslamcoy members, which is our main exploration target. Here is a seismic cross-section showing the Pelevancoy 1 discovery well. Again, excellent quality seismic. You can clearly see the reflectors. We see gas being trapped up against a fault there. We can see also some amplitude anomalies deeper in the section here, which will be tested with this Pelevancoy 2 well. So we're absolutely delighted that we can see the seismic, the seismic clearly shows good reflectors that are easily mapped. And now it's just a question of demonstrating they're gas saturated and at what rate the well will produce that. Here is the seismic amplitude map. So clearly it's very closely tied to the 2 pay intervals in the Pelevancoy 1 discovery well. You see the bright spots clearly indicating Teslamcoy pay and amplitude anomalies. We've done extensive AVO work, and we are convinced that the reflectors demonstrate an extension of the gas pay tested in the Pelevancoy 1 well. And then we have pretty much room to run in terms of additional appraisals around the P2 first appraisal well. Here's our reserve summary and some net asset values. The gas price that was used here was Sproul of January 2023. Things have come off a little bit, but very, very healthy net asset values. And in addition to the 1P, 2P, and 3P reserves that DeGolyer and McNaughton estimated for us, they also estimated a number of 3 prospects with prospective resources to enhance the resource potential of the block after we prove productivity of the Teslamcoy pay. Just some development scenarios on the 1P, 2P, and 3P case. Again, the peak in production is highly dependent on the reservoir. We certainly don't want to, and we do have modeled to date pretty significant initial declines based upon our speculation that it's a tight gas development. and therefore we can expect pretty significant decline rates in the first year, not unlike some of the unconventional wells that are being drilled in Western Canada. However, there is some optimism that we may have better permeability, which this well, we're going to do extensive coring and gather significant amount of core data and modern log data, really to study the rock and make sure that we understand what is going on before we embark on a completion and probably a stimulation design. So the price or the production forecast really reflect a tight gas development, and in certainly no way is it optimized, but we will review it once we get additional well data from the appraisal well. Again, we probably will use horizontal multi-stage fracs. It's well-worn Canadian technology, and this is one of the things we are going to bring to Turkey. There's been a few attempts in the past, but nothing in a significant way. So we are spending not an insignificant amount of capital acquiring geological data. It all starts with the rock. We want to make sure that we understand it. We have a good view on lithology, clays, shales, silicon content, just to make sure that we can properly design a stimulation for it. So again, we're using technology that's well worn in Canada, but bringing it here to Turkey. Financial overview. This gives us, again, some development potential for the three cases, the 1P, 2P, 3P. We are looking at very, very healthy economics, very, very healthy IRRs for this particular, or for each of the three development scenarios. Again, some more development and scheduling from the 1P case. We are now well into Q2 of 23. We are off and running in terms of our development schedule. And as I said, we'll have some test results after the completion, likely in early September. We look forward to getting after it with a number of other appraisal wells, and then immediately going to production by the construction of a pipeline to one of two possible tie-in points that we've been investigating. This is the 2P development. Again, we want to get after it aggressively once this well is down, which would likely involve us seeking additional financing, probably through an offering, a public offering of some sort. So we're not going to be too shy about taking this and developing it ourselves. I think we'll do a very good job at it with bringing Canadian technology, and certainly we're very, very capable of doing it. Fiscal regime is absolutely fantastic. 12.5% corporate royalty on oil and gas production, 20% corporate tax rate. The contractor take is very high compared to other jurisdictions in the world. So, and that combined with the very high prices for European natural gas, any sort of sniff of gas is very, very economic and has a low threshold of commerciality given the proximity to tie-in points. So we're highly confident that with a proper well test, we'll be able to tie this gas in and get generating cash flow here very, very quickly. For close tie-in point, it's about 24 kilometers. Again, quite easy access. So we shouldn't have any issues in getting this initial well on production as soon as possible. This is also very, very exciting. And again, the hottest gas market in the world at the moment. You'll see the bold red color is the price for Turkish gas in US dollars per MCF. We had a considerable peak last December, peaking at $32 an MCF. I think we in the industry, while we are delighted to be exposed to that sort of high prices, clearly it is not sustainable from a country's economic standpoint, and therefore demand destruction as a result of difficulties in such high energy prices are quite reasonable. But we are expecting long-term prices to be in the $10 to $15 an MCF, potentially peaking in the winter seasons when, based on a cold winter in Europe, we might get some spikes. So clearly it's a very, very good gas market. And you note that even in the depths of COVID, prices did not drop below $5 an MCF. So I think we have a very good manageable floor price on gas, and clearly are exposed to the upside that we believe will happen in the near term in the European gas market. Cash flow summary, this project will generate significant cash flows based upon even modest production forecasts. And of course, if the 2P case or even 3P case on the Pelevankoy gas discovery are realized, plus one or two successes on the prospects that have yet to be drilled, this will be a significant cash generating asset that we wish to certainly retain as we go forward. Full cycle economics, again, very, very attractive, very good F&D costs, right around $10 to $12 per BOE. We're expecting pretty modest drilling costs are manageable, given that it's onshore at moderate depths of around 2,200 meters. So this is tailor-made for a Canadian style of rapid, clever, appropriate, optimal development, and that's certainly what we are intending to do on this project. Again, look, here's 4 of the prospects that we have on the block. We see, again, the same seismic amplitude character. We are absolutely frothing at the mouth to get a well into each one of these to determine what they may be, because clearly we think there's additional potential for additional resource or additional reserves to be discovered on the block. Again, this is our summary. We are experience management. We're a private company, so we have the pain of perhaps not as good access to capital as being in the public markets. But on the other hand, we are 100% of the asset. We are private. We are funded to drill and complete this well. We have a very, very near-term high-impact drilling opportunity that we're currently pursuing in the best gas market in the world. And we have a number of other goodies that we are pursuing here on the backs of our discovery here at Pelivanco. And that's it. 2 minutes over. Apologize, Adam.
No worries. We still got lots of time for Q&A. Thanks, Michael. So maybe first thing I'd ask is, obviously you got a tight gas resource. There's lots of precedent for development of those type of resources in North America, but it's a little bit of a newer technology being employed in Turkey. How are you going to access frac crews to frac the wells?
Yeah, there is a nascent stimulation and pressure pumping industry in Turkey. I mean, the industry has been active for going on for over 40 years, perhaps on even to closer to 50 years. So, gas is being produced and discovered from shallow conventional reservoirs, but there is a pressure pumping industry that is present here, and we've had numerous discussions with them during the pre-planning for our stimulation and completion. It's really the horsepower at surface needs to be appropriately applied downhole, and that's what we bring is the proper design of the downhole portion of it. How do you design a multilateral or multi-fractured well, given that you do have access to the horsepower at surface? And I think if we can prove up that this is indeed commercially productive from these, even from a vertical well, then of course success brings other entrants into the area. So we don't think that the horsepower is the issue. It's properly designing the stimulation, which is what we do very well coming from the Canadian industry.
Maybe just on the gas markets, obviously, you highlighted the prices were quite robust, and even got quite elevated last winter. What are your kind of thoughts on the macro price environment for Turkey and the rest of the continent, and how long could we see this kind of sustained elevated price last in your view?
Yeah, my own view is that, first of all, the major supplier to Europe being Russia, I think no one is going to trust Russia for decades. And therefore, you can almost take that gas out of the European market, I think, given the application of sanctions and the desire of European nations to try to find other sources. And of course, the major source then is LNG. So my view is that European gas prices, notwithstanding seasonal volatility on the upside, I think, really will settle in onto world LNG prices. And I think if given the transportability of LNG worldwide, the floor being more or less the LNG market in the Far East, I see gas prices being in the $10 to $15 an MCF range for the foreseeable future, with periodic spikes to the upside based upon unseasonable weather in the winter months.
Yeah. And, just as you kind of get to forward in development, is there an active market to actually hedge your volumes within Turkey, as you maybe want to try to capture some of these prices and sustain them? Or essentially, are you would it be applying a dirty hedge using one of the benchmarks on the continent?
No, there is a forward market in Turkey. It is not terribly active, given the fact that TPO is the major player, and the government is encouraging them to sell their gas immediately into the market. But the moment there is the possibility to forward sell for 12 months out, and as soon as we get production volumes into the pipeline, we will be exploring that as a potential hedge.
How much capital needs to be put into to surface facilities? Is this a clean gas stream, or is there other molecules in there? Whether it be a CO2 or an H2S or anything like that, that needs to be removed from the stream before it's market ready?
No, we don't anticipate it. Ironically, the BOTAG, which is the National Pipeline Company, has a remarkably high nitrogen content standard. I believe it's 5.8%, which is unheard of in most international jurisdictions. So the market already takes from other producers, and we're not sure what our analysis is going to be, but they're already taking what you would call less desirable gas because, again, they're hungry for domestic production. Our own view, based upon the analysis of the test that we got from, or the analysis that we got from TPO, we're looking at probably 8 to 10 barrels a million. So it's not hugely liquid rich, and any sort of more extensive processing other than doing a dehy, taking out the water and doing some condensate separation either at the well site or at a simple gas plant will really be dictated by the gas analyses that we will collect from the extensive testing that we plan to do. So we do have in our economics, we do have two scenarios. One is strictly just a simple dehy compressor and putting it into the system that way. And the other one is having a little bit more processing in order to collect some of the condensates that are there.
Okay. But you can put those condensates as well if you want to go the simpler route right into the pipeline, just given that they take a less stringent stream.
Yes, that's true. And if you look at the BOTAG heat content requirements, it is quite a liberal pipeline grid that they've developed here. So again, the notwithstanding you would need to meet the dew point spec on the gas, it does take a rather higher heat content for gas that's put into the pipeline system. Yes, it does.
Understood. And we'll wrap it up with this question. Do you see the opportunities to expand your footprint in Turkey or maybe some of the other nearby area in the near term?
Yeah, yes, we do. And we are in discussions with a couple of other operators here about looking at their acreage. I think now that and really a lot of it will depend upon basically the flow rates that we're going to get from the Teslamcoy, but also this Echelon I think could be a huge company maker. We're hearing some discoveries made by other companies. So once we get a handle on how the seismic is tied to the Echelon, and can we actually see it, and then obviously is it productive, then we'd be looking at a Echelon centered exploration acreage on additional licenses in our vicinity there. So we think, notwithstanding we've got a very good asset that we acquired for nothing, we do see the potential to grow our asset base in Turkey, but also we are looking at a couple of other projects elsewhere internationally, again looking for those unique opportunities that we can acquire them organically for very little upfront, but yet have a quality asset behind them.
Great. Well, that takes us to the bottom of the hour. I'd like to thank Michael for coming in and presenting the Gazelle story to us today.